Hey everybody, welcome back to the channel. Today I want to go over the London Silver Bullet for Friday, December 8th. This is NFP day, right? So NFP trades later, so we can trade London. Okay, so the first thing we're going to do is we're going to open the Kraken Silver Bullet indicator and we're going to turn on the Asia session and the PM session. See where these will line up at. Okay, well, PM sell side obviously has been taken. Buy side's probably way up here. Yeah, don't really care about it. All right, so we can take off the uh, PM side. Let's take off PM. Obviously, we just took out the Asia low, so I'm gonna leave that on. So now we're looking for a reversal, right? We want to see us go higher and target the Asia high, right? That's what I'm always looking for on when we're looking for sell side and buy side liquidity. One of them's taken, looking for the opposing one. So let's go here. Okay. Truth be told, I saw this as a market structure shift originally, and then was looking to see if this was going to create a fair value gap, and it didn't. It just went down, so I didn't have that marked as a market structure shift because obviously it's not, since this is now lower. So let's do this. It's kind of a nice little phantom trend line there. Oh, and it just got broke. Oh, and it just got broke. Look at this trend line traders. Look at that. Okay, well, when you see a pattern like this where you have a low, a high, a lower low, and you're trading up, keep an eye on that. That's your market structure shift, but that's also a breaker. Will be a breaker if it trades through it. Okay, so just keep an eye on that when you see this pattern. All right, so market structure shift. Breaker. Right? Can trade into it. You can trade into it. Right there. You trade into it right there. I'm showing you that you could. Okay, that's not where I entered when I entered this trade, so I'm just entering it where I entered it. This is where I bought. Close that candle. By there, the stop goes below the breaker, goes to Asia high. So we're going to move our stop right here. I move this to right here. I like it consolidating right here. I like to see some push higher. That's not higher. Not a huge fan of that. That's better. That's not better. This is trading right here. This is always fun to watch this. Alright, so what I tell you about when I say you see this low, high, lower, low, trading through breaker, right? Low, high, lower, low, traded through breaker. Perfect. Okay. So I can get a second entry in here because this is far enough away. Let's see, from right here, that's, you know, almost 20 handles, so that's far enough away. We can enter a second trade if we get in that right there. So, but this time I'm going to wait for any kind of thing like that right there. I'm going to buy right there. That's where you would have entered, but your stop is only, you know, you're talking this position, 3 handle stop. I mean, you're not doing much because you're just for the breaker, right? You can go, you know, 4 to go below this one that created the breaker, swing low. You're still targeting up here. So you're still targeting, well, 20 handles right there. So let's go with, well, it's still the same. It's still the same right there. Now this, you would move this up to break even for the first one to try and save you money from the second one. So you're going to move it up. Am I going to take a partial? No. It's London, so London doesn't have a huge moves generally. So I'm just going to protect my stop. But let's do the 3 PD array rule here. Let's start marking these out. Okay, fair value, yeah. Oh. So volume imbalance. Fair value gap. Okay, so where's our stop go? Below the 3rd PD array. 1, 2, 3. Okay, if we create another PD array, and we did, I'm moving it up. If it takes us out at any time, that's what happens. Okay, so now this goes to right here. Okay, another PD array. So now if there's an overlapping PD array, I count them as one. I want to see one full one and then a second one, then a third one. I don't like to, when I'm stacking it this way, when I'm doing trailing my stop, I want to see 3 separate PD arrays. If there's a, let's just say there was, let's just say price came down here like this, and then like that, right? And let's just say there was, we didn't move our stop, we got saved, but we had another PD array right here. This one, these two are one. This is the second one. This is still the third one. Okay, just want to show you how I look at my PD arrays. I want to see 3 separate ones. That's just my own rule. That's not an ICT rule. That's just the way I trail my stop. And I've been asked several times, can I show someone how to trail my stop? And that's what I'm doing in a lot of my videos. When I trail my stop, I use the 3 PD array rule. And for me, it's 3 separate PD arrays. Okay, they can touch each other. Like there could be a volume imbalance here on top of a fair value gap. That's fine, but they got to be separate. They're not overlapping. Okay, it's important because, okay, so here's another PD array right here. Okay, so where does this go? Right up to this one, right there. Okay, we violated one PD array in the middle of our second. We might get taken out here. We might get taken out here. See how this is a overlapping fair value gap? I'm going to mark it, and then I'm going to get rid of the other one because this is now higher than that one. So I'm going to remove this one. This is now the third PD array that we got. Okay, I'm not moving my stop anymore. You understand why I did that? Because the other one was in the middle of this one. So if it's in the middle of it, I'm using the highest one, and then I'm just making that be the new PD array and removing the other one. So that's now 1, 2, 3, my stop. It's violated, not violated. Yeah, there's volume imbalances right here. Not marketing them. Why? It's in the middle of this PD array and in the middle of this fair value gap. So it's just all right there. I'm not changing it. Okay, now there's a fair value gap right here, and that is separate. And that, so now this goes right to here. I hope that's clear. The other thing is if you zoom this, it's hard to see when even for me, it's hard to see when it's this big. But there is a small, let's do this right here. Small volume imbalance right there. So technically this should be right here. Okay. And we're so close, I don't mind moving it up higher. I really don't. If it takes me out, it takes me out, but I would rather not give up too much. All right, so there's another volume imbalance right there. Here's another volume imbalance. Listen, when you do this, a lot of the times you're going to get taken out. Don't be offended when you're taken out. Right? I'm not giving up more than 180 bucks right now from here to here, and we're so close. So from right here, where price is at right now, that's $20, and I'm risking 150 for $20. You wouldn't do that. If I said, hey, I'm going to give you 20, you give me 150 bucks, would you do it? No, you're not going to do it. That's what we're doing right now with our stuff. So don't be alarmed when you do that. If you leave your stop down here, you're risking hundreds of dollars. It doesn't seem smart to risk 150 bucks, but I don't have a way. I don't have rules for as it gets closer what to do, so I haven't figured my rules out for that yet. So okay, there you go. And it's now 5 o'clock. Okay. All right, that looks really ugly, but it was very well calculated. Okay, so let's take off the long positions and let's go through this. And that was a long video, but this is the London silver bullet. And we came to 3 o'clock and we saw that the Asia low was taken and Asia high was still open. So we were waiting for a market structure shift. We got one. And that was also forming a breaker block. We entered on the breaker block, aiming for the Asia high, right? Price came up, consolidated for a little while, and then created a new breaker block, and we entered a second position because it was 20 points away from our high. Still plenty of room to take a second trade, and so we did that and raised our stop loss. As price is moving higher, it got really close to our target, and we started using the 3 PD array rule for trailing stops. And what that is for me, my version is I want 3 separate PD arrays, and my stop can be below the third one. As a new one gets created, we move our stop to the next PD array, up to the lowest part of the next PD array. If 2 PD arrays are overlapping, like this one was, right? We used the bigger one and we removed the smaller one, right? So that one was removed, just like these 2 volume imbalances right here were removed because this engulfed it, right? And so I used that full PD array when our stop was here. Then we had a new fair value gap. I moved my stop up to here. Had a new volume imbalance, moved my stop up to here. Right? Got a new volume imbalance, moved my stop up to here. Right? When you use volume imbalances, they happen quite a bit. Like there's 3 right here. So I usually try to stick to volume or to fair value gaps. And I'll use volume imbalances when there's a lot more breadth and more room for price to retrace and come back. But when I get closer, I tend to be using volume imbalances more to try and bring my stop closer because I don't want to lose as much if it takes me out, if it retraces. So I've noticed that in my own trading. I use fair value gaps for the most part, and then throw in some volume imbalances as I get closer to the TP target. That's just me. You can use it however you want, but I like to see 3 separate PD arrays. If they overlap, I use the biggest one or the highest one or lowest one, depending on which way you're trading, to use to give you the most wiggle room, basically, for price to, retrace a little bit and still hit your TP. So those are your 2 silver bullet trade setups. Technically 1 silver bullet, 1 pyramid entry after the silver bullet hour for Friday, December 8th, before NFP, using the Kraken Silver Bullet Pro indicator.